Well, I guess that depends on largely on price. The last comment about a buy with a caveat. We believe in the long-term economics of Disney, but I think there are risks to be aware of. It's difficult to really ascertain what the economic profitability is, particularly in the short and medium term. And so we size it. I think you have to keep the sizing small, but we do believe in its pricing power and its ability to have long-term volume growth opportunities. We view it as a global champion.
I can't think of another company that does more with its properties to make money.
Absolutely. I mean, it's that flywheel effect, and that's what gives us confidence. So when you compare to all the other people that are competing in this space, it's a fierce competition, and it seems like a race to the bottom. And really, the jury's still out whether or not streaming can even be a profitable business. But with Disney, a couple things give us confidence, and one is the fact that flywheel effect, as you mentioned. I mean, they're not just selling content, or say on Netflix it might be one and done. They're selling experiences. They're selling rides. They're selling a cruise. They're selling consumer merchandise and toys and everything else. And that flywheel allows them to price their content lower and still remain profitable over time, combined with the fact that their content has a longer shelf life. Like I say, instead of one and done, these are things that are cross-generational, and they can keep resurrecting and using over and over for generations to come. And so it's a different concept. In other words, one is trying to get as many users as possible, a land grab for users, and amortize it across many. And it's questionable how that will work out. Whereas Disney's strategy is, we don't need to run so fast on the treadmill and constantly make new content. We could slow down and monetize through that flywheel.
So, Brian, I'm curious, as a shareholder, do you like the fact that Disney is going into a business that is so costly, that will require money in order to, I mean, they've been a very, sort of a conservative sort of business. You can value the theme parks, you value all the other properties. And in the streaming war, you don't really have a good sense. I mean, they can say they're going to spend X, Y, and Z, but Reed Hastings just last night at the DealBook conference said that he's going to be spending more. I mean, this is an arms race for content here that Disney is entering.
Yeah, and I agree. And so, yes and no. I mean, it's concerning but the fact of the matter is they have to do it. And to me, it's incredible to see how many businesses do you see where the CEO has the guts to disrupt their own business. But I like seeing that here's a CEO who has a long-term viewpoint. And I think that's one of the things that's made us successful at YCG is we don't just focus on the short run. We're looking at, okay, despite the murkiness and the messiness of the numbers that are going to be coming in over quarter in the next few years, the real question that has to be answered is, do their properties have pricing power? Because media historically has been valuable because of the cartel, essentially, and that media cartel has been busted up and broken by the internet. Disney was not only valuable because of that, but they were also valuable because of the iconic characters and their stories. And so while we have, it's uncertain how this will shake out in the short run, we believe that they will be materially larger in the future because of their long volume growth opportunities in China. You see the success of the Marvel movies out there. They'll continue to grow. It's a Disney has a global appeal, combined with the fact that they've proven pricing power. Almost every business, if you look at it, after adjusting for inflation, is in decline on a pricing metric. And that's what's happening in the media world right now. It's great for consumers. Disney has proven, for example, their ticket prices, they compounded 7.5% for decades in raising prices, far in excess of inflation.
All right.
So that's key, right? You got to prove that, will they be able to monetize it in the long run? And I think there's an advantage in being a long-term thinker.
Yeah, it does seem rarely to get cheaper to go to Disney World, I would have to say.